Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy. I'm joined by Jerry Correia. Gold on the year is up 19%. Silver is up 17%. Year over year, gold is up 36%. Year over year, silver is up 26%. Again, as we record the show today, the price of silver is trading at $31.93. Gold is trading at $31.04. We have a gold to silver ratio of 97 to 1. We haven't seen this type of ratio since 2020, when the gold to silver ratio hit an absolute extreme of 114 to 1, 116 to 1. At that level, the paper price of silver was absolutely unattainable for people. Yes, the paper price was low, but you could not buy the actual physical product. Here we are. Silver hasn't really come off a whole lot in the wake of the implementation of tariffs, though we did crack below 32. Gold went down this morning, right back up. We're trading around $3,100. And again, just to reiterate, because I think this is so important in the wake of the pullbacks in the market where we've seen billions of dollars erased off of major exchanges, that gold and silver are up in double digits this year and up majorly year over year. And yet they are undervalued against the debt, against the money that's already been printed. And Jerry, your thoughts on what we saw in the immediate aftermath of the implementation of tariffs today?
Yeah, Jeremy, this was sort of expected. As I mentioned on the show last week, we mentioned it. We kind of nailed it. You know, there's too many things in support of the physical precious metal space. You mentioned debt. You mentioned the currency devaluation, the theft that is happening overtly now. We're losing purchasing power. The panic is on at the COMEX and at the LBMA. This is continuing. The silver squeeze, despite the price, the pullback, silver is not the silver price, okay? The silver is valuable, and it's critical to a point where people are standing for delivery. The contracts that are shown in the LBMA, they cannot deliver the physical. So we anticipated a pullback. The one caveat that could cause the pullback would be the unexpected, the tariffs. We got the 10% baseline, plus others may be coming down the pike. So as a result, the stock market started to sell off. And gold and silver will sell off at first, as they are the much needed liquidity source needed to cover paper margin calls that are going on. But they will rocket higher when the Fed and the calls are out. The Fed this month will be called to potentially slash rates. Cuts, perhaps, but we could be seeing slashes because revisions are happening. Goldman Sachs, many banks, Saxo banks are calling stagflation worries, higher these inflation. The tariffs will lead to higher inflation, thus resulting in lower and lower growth. There are going to be cries for calls for cuts, Jeremy. And as we know, over the past 3 rate cut cycles, on average, silver has outperformed everything and rockets about 400% during rate cut cycles. So we just got to continue to pop the popcorn, keep the powder dry if you have any, and get into the silver market. Don't be a drama queen, just buy the dip.
I have to say, we haven't experienced any anxiety amongst our clients in the precious metals sector this past week. You know, people are always connecting gold and silver to politics, to geopolitical things, and that rightly so, especially when central banks have such a large role to play in those things, and they've been acquiring so much gold. I heard something interesting today. Someone was making a point. I think it was on Bill Holter with Arcadia. He was interviewed
with Chris, yeah,
and he was saying that banks can backstop gold, right? So we talked about this delivery from London over the last few weeks, and don't forget, it all started because they wanted to know, is there gold at Fort Knox? And all of a sudden, you start seeing all of this physical gold come into the country, and that they didn't really have it to deliver in London. That it was 2 days plus 30, plus 60, plus 90. They didn't have the product. And we talked about it on the show that central banks could backstop. London could borrow from Argentina, borrow from Korea, and say, listen, we need the gold. We'll get it back to you at a later date. But in silver, there is no backstop. Central banks don't own it. So you are absolutely screwed if they run out of silver over at the LBMA. And according to Eric Jung on X, they have something like 3,000, maybe 4,000 tons of silver left as a float, and they're pulling out 1,000 tons a month. So this could be quite explosive for the silver market. And if you want to own it, you can own it and have it physically in your registered account or just buy it direct. And given that, given these sort of setups, knowing that it's undervalued, and we'll get into why it's more undervalued, both gold and silver, but given that setup, it seems like such a good time to be getting involved in the market because silver's really, really, it's always been, could be explosive, but now we can see the wick getting shorter and shorter.
That's 97-1 silver to gold ratio is a screaming buy. Silver is a coiled spring ready to explode higher. And to comment on the interview with Bill Holter, Chris said, Bill Holter talks about the flaws in the narrative that gold is flowing from London to New York because of tariffs and why he thinks we're headed toward a failure to deliver. That's a default in the paper, gold, and silver markets. And despite the price and the silver day and the silver squeeze, it did impact the physical markets this week. As Chris Marcus stated, the former J.P. Morgan Precious Metals Managing Director, Robert Gottlieb, he said this about silver.
Yeah.
He said swap dealers, banks, positions per the CFTC are extremely large, and someone may be taking a huge position and be very exposed. And that came from Eric Jung as well. So we are seeing a massive scramble. It's like musical chairs where there's only one chair left and you got 7 people participating and dancing around the chair, or actually not dancing. They're trying to run for that one chair that's left. So it's a very exciting time. Stay tuned to these flows because all flows are headed for a delivery into the U.S. and we're watching the flows coming in. And all of these the tariff talks are just scrambling, and what we're realizing is that there is a push for resources, whether it be oil, whether it be the critical minerals, whether it be gold or silver, the precious metals, the monetary metals. The key thing is we have a problem in the financial system. We have a problem with the derivatives market. We have a problem with debt. And when these issues mount to a point where it's at the climax, the rush from intangible assets to tangible assets, from ideas to the real thing, become paramount. So the message is very clear. Get that one chair before they do.
And in the next segment, I think we'll get into the tariffs and, what could be at play. What is Trump after, right? What's all this pandemonium about? And, it's really upending things and making everybody uncomfortable because no one really has an idea of what's going on, right? At the end of the day, you listen to all these different pundits and nobody really has a sense of what's going on, of what's actually what are the changes that are actually trying to be made. And so much of it could be that his personality gets in the way, right? They get caught up on the personality as opposed to what the changes could be and who's standing up to those changes and why. And there's just a lot to unwrap on that. So I think in the next segment, we'll try to do our best to add to that conversation. In the meantime, I think that gold and silver has been a great hedge against inflation. There is no doubt about that. Absolutely no doubt. Just look at the last year alone. And typically, you wouldn't expect it to go toe-to-toe with inflation, but certainly gold and silver have taken off well in the last couple of years and been a great hedge against the devaluing and loss of purchasing power
Exactly.
of both the Canadian and the US dollar. But it's going beyond that, and this kind of leads into the next conversation, which is it goes beyond just being a hedge against inflation and a hedge against geopolitical risks and getting to the root of the problem and actually becoming a part of the solution. And I think where we really need to drive home the point, Jerry, is that I don't think people realize how undervalued they still are, because they look at price. They say, oh, look, it's gone up in price. And there's no connection to what does that mean? Especially, you look at Bitcoin, they go, well, it could go to $2 million. Well, how? What is that connected to? You're just saying a price. You're not rooting it in a reality that says, here's the value of why you're going to pay this much for this asset. What is it worth at the end of the day? What do those ounces really buy you? And the fact is, and you'll hear it throughout the rest of the show, gold and silver are actually incredibly undervalued at today's prices, even though they've moved up a lot. So if you want to hold physical gold and silver, you can give us a call at 1-877-8-SILVER. Purchase your product direct. Take it home. You'll store it yourself. You'll have it forever. Ease of liquidity. We only sell products that are going to be very easy for you, your kids, your family to sell at a later date. We want to make sure that you have that ability, and we do that by providing the best products, the most globally recognized products that are going to be easiest to sell down the road, and also be the cheapest to sell down the road. That's also an important part of the factor. As well, we can help you to store that physical product. Maybe you're looking to buy more than 1,000 ounces of silver, for instance, and you want a place to store that product for ease of liquidity. Make sure it's secure and insured. We can help you with that. And of course, if you want to hold it in a registered account like an RSP, TFSA, Lira, LIF, RIF, you name it, RESP, you can own physical gold, fully allocated, fully segregated. Go to the vault, audit your product, hold it in your hand. You know the motto. If you can't hold it, you don't own it, and you can do that inside your registered account. The number, 1-877-8-SILVER. The website, guildhallwealth.com. For those that are new to the market, you might have seen the prices of gold and silver skyrocketing over the last year or two, and you're thinking to yourself, have I missed the boat? Am I too late? You're sitting there, you're thinking about it, you're watching it go higher. It gets harder and harder to do as the price gets higher. You're waiting for that pullback, and then you know what happens, Jerry? The pullback comes, and you go, oh, maybe I should wait for a lower price. Mm-hmm. All these market psychologies. And the thing is as I talk to people a lot of the time, you realize you have to ground it in reality and understanding value.
Exactly. The value here is your wealth insurance. This is not a day trade. You're going to be buying and holding your precious metals. This is an asset that you want to hold on to and value. The time is to value your wealth in ounces. The fact is that the loonie has lost over 97% of its value since 1915. In fact, all fiat currencies that are no longer backed by gold or silver are declining due to the fiscal and monetary and government spending, overprinting. And we have come to a point where we are on the verge of continually inflating, potentially hyperinflating. So the asset that you own is denominated in a currency. So the price that we see in precious metals this week, and the price that you're seeing in silver is not its value. And who said it best this week was Robert Kiyosaki. He said, question, is silver more valuable than gold and Bitcoin? He says, I say yes, because demand for silver is increasing for use in, number one, solar panels, electric vehicles, computers, for electronic products, 5, weapon systems. He mentions it. Number 6, medicine. And number 7, water purification. Supplies of gold and Bitcoin do not decrease, yet silver supplies decrease. Yes, 6 years straight of structural deficits in silver. And best of all, silver is the least expensive when compared to gold and Bitcoin. As the price of gold breaks all-time highs, silver prices remain 60% below its all-time high. Why? Because silver is useful, and its price has been suppressed for decades to keep the silver affordable for the military, for these industries. And he believes the silver price manipulation is over. And he strongly believes the price of silver will slingshot to all-time highs, possibly double towards $70 this year.
And, he's obviously a very wealthy individual. But I think it's important to look at other wealthy individuals who put their money where their mouth is and pick up precious metals. I remember several years ago, Jerry, and I wish I knew around the price that happened, but it was huge news in the precious metals sphere, which was that one single individual, and speaking of Bill Holter, he was the person who got the order, but one individual bought $50 million worth of silver. And this was several years ago, so for sure it was in the maybe low 20 range, right? Maybe it was, I'd say at least mid 20s. It's up 30%. That person made the absolute right move to go ahead and buy actual physical metals. And I'm sure it took a while to fulfill the order. That's one example of a wealthy individual putting their money where their mouth is. But there's been another one recently as well.
Yeah, who was that investor this week who bought 395 metric tons, or a whopping $438 million worth of silver? Well, that person, David Bateman. Have you heard of him?
No, I've never heard of him.
Let's find out who he is.
Okay.
He's a tech entrepreneur, and he's the co-founder of a company called Entrada. It's a Utah-based property management software company. And even after stepping down as CEO in 2021, he said this. He actually retained almost $2.1 billion in full ownership, majority ownership of the company. So he's no longer the CEO, but he still has a majority stake in the company. But he said this in his post this week.
Okay.
Here are the reasons I invested close to $1 billion in precious metals over the past 6 months. I included the purchase of 1.5% of the annual global supply of silver, which is 12.69 million ounces. The global monetary system is about to collapse. The Great Reset, or Basel Endgame. The biggest credit bubble in history will soon pop. It's $300 trillion. There is no way the U.S. can refinance its $28 trillion in maturing treasuries in the next 4 years without an obscene amount of printing. The tariffs are hastening the collapse, and it's by design. Gold and silver are the only meaningful life raft. Physical possession is everything. The whole world right now is a sophisticated game of musical chairs. The chairs are precious metals. Crypto is a psyop. Those who purchase will have no chair when the music stops. Real estate, crypto, stocks, and bonds will all lose significantly compared to the precious metals. The banking system has been meticulously designed to seize your assets to buoy up a collapsing banking sector. See the great taking. You have zero counterparty risk with precious metals. This is not a drill. Your grandkids someday will either muse or lament this financial decision you're now faced with. Don't fail them. Huge message, Jeremy. What's your take on that?
I think it's a great message. While you were reading it, though, I couldn't help but think, can you be right sometimes for the wrong reasons? In other words, even if he's not 100% accurate in his reasons to own it, does that mean he won't be successful? My personal take is that I think, there could be troubled times ahead. There are some upheaval going on. I think that leads into the tariff conversation here. And by the way, if you want to do what Bateman's doing and own physical silver, you can do that with us. You call 1-877-8-SILVER, the website, guildhallwealth.com, and you can buy your own piece of the global supply in your registered account and have it physically allocated and segregated just like him. The pictures were surreal, by the way, of his delivery of the product. Can the debts be paid off? Are they going to have to print, trillions and trillions of dollars? Time will tell. Time will tell. Look, it seems to me that right now there's the debt. We've talked on the show for years. You've got to cut the spending. Doge is there to cut the spending, cut the waste, and no one can disagree with the moral imperative to cut government wasteful spending. Now, people who don't look into it or want to assume that all of the spending is legitimate and perfectly moral, okay, don't look into it. Sure. Don't see where the money's being spent. Don't look into how the sausage is made. But it's interesting to note that as they cut, you start seeing all of these NGOs cutting staff, right? We know that they were spending money to perpetrate psyops against their own people. And that ends as you stop spending that money.
Fact.
You got to stop the waste. That's
Yeah.
number one. Number two, you have to fix the tax code. To me, that's where this is headed. You can't, in Canada, someone asked me today, well, what if the government confiscates gold? And I always point out to people, well, what if they stopped taxing you at 40%, the HST at 13%, and then they stopped saying inflation was at 2 when it was really 7 or 10? What would happen if you stopped having the government steal 60 to 70% of the wealth of the value of your labor?
Yeah. Their attack is multifaceted. It has been for a long, long time.
Right? But you're worried about them taking your stereo. Right? Not that gold's a stereo, but you get the point.
Yeah.
They need to stop the spending, right? So you got to cut the waste.
Their music stops.
You need investment, right? They've gone around and started getting investment. You need to get investment. You do need a lower dollar, right? You need a lower interest rate so you can service the debt.
Level the playing field.
And then what did we talk about right out the gate this year is revalue those assets, baby. Like get the assets side of the balance sheet up. And look at what Pierre Poilievre did today as they were talking about the tariffs on the cars.
What was that?
He said, well, we're going to cut the HST.
Perfect.
It balanced
out the tariff.
balanced it out. Right. And I've mentioned that they'll get to a point where they're so desperate with inflation and whatnot, they'll have no choice but to start cutting taxes
At home.
The liberals just did it. They're like, we'll cut the carbon tax. Right. Just as the summer fuel started to come out. So, I think that there's a lot at play here. I think that there's a lot that people don't know. And I would say, get digging on the research. Don't just pay attention to what the newspapers are telling you, because there's no guarantee that they know, right? Rand Paul's been very reactive to this, and it's like, well, who are you defending, right? George Gammon was saying, well, there's no tariffs in Australia. Doesn't put any tariffs on the United States. No, but they've got a lot of regulation. They've got soft controls.
Does the same damage,
right? They control what can come in. It's like in Canada. It's like, look, I'm not a proponent necessarily of banks coming into Canada to compete, but if we did have competition, that might mean that you're paying less when you pull your money out of the bank, or less fees because things are competitive.
That's right.
Maybe on media. Maybe if Verizon was in Canada or whatnot, I don't know.
Yeah,
Too much in the,
Starlink. Cancel that.
Maybe we end up paying less there too, right?
Yes.
So there's protectionism, but I think part of the tariffs is also just prodding to see how much of these regulations holes can be poked in.
Yeah.
Where are there deals to be made? Where, and it's, look, I wouldn't forsake any prime minister going around the world saying, hey, are you willing to lower some of those regulations so we can get some Alberta beef in your country?
Exactly.
Right? Like, are those regulations really legit, or are they kind of like, they could be, push comes to shove, you might fix it.
Yeah.
That's the type of stuff we're talking about here. They're trying to make things a little bit more fair. And once you do, and you get to maybe a stage, hopefully, where you have surpluses, where you can start to say, great, we'll lower income taxes. Because Rand Paul, Peter Schiff are absolutely right. It is inflationary, and you need the other side. You need the inputs and outputs. And if you don't start getting lower income taxes on the other side of tariffs, you're screwed. You can't have both. You've got to see a switch at some point.
Yeah.
What do you think that's going to change?
Well, I think
what do you think of it all?
My biggest takeaway from Bateman, who bought all the metal, he was actually right. These tariffs are hastening the collapse. It's fast forwarding the exposure, and it will correct things. You saw immediate response from Thailand this morning. They're going to fix their issues and their tariffs upon the U.S. So we're seeing a immediate reaction, and it's multi-pronged. It's a multi-pronged approach. But in response to even Rand Paul, we know this is a monetary policy. It will ultimately lead towards a sound monetary policy. Because if we
think he'd be pro for it, then?
Because if we look back in history, between 1870 to 1913, before the Federal Reserve was birthed, there was no income tax, and the U.S. relied solely on tariffs. Tariffs levels the playing field. Bretton Woods allowed a 1% ban on currency, so there was no currency war. And then during that time, there was what? There was the gold standard. We will see the money printing, as Bateman said, potentially. He says we can't refinance this debt, but yes, we can if we revalue that gold price. Once you implement the Gold Standard Restoration Act, which was H.R. 9157, the Gold Standard Restoration Act is to define the dollar as a fixed weight of gold and silver. So once we do this, we can revalue, and yes, we can deal with the debt that way. You don't necessarily have to print, and hyperinflate, but you may have to do that to begin, because that's what the bankers want right now.
I feel like we're at a point where a building is being built, there's spades in the ground, and people are saying, well, I'll believe it when I see it. It's like when you see a condo being built and you see, there's people you haven't actually seen the building go up, but you see people there, they're digging in the earth, and you go, yeah, there's going to be a building there in 6 months, right? But people can't see that yet, I don't think. I can't even see it yet. But we know there's big changes at play. Let's stay on this topic and how it relates to gold and silver, and where does that push gold and silver potentially in price if some of these things start to make their way through the system. The number 18778-SILVER and the website, guildhallwealth.com. I do want to point out, Jerry, that I think that the buy silver last week that we discussed on the show, I don't think it was as successful as Silver Squeeze, let's be honest. But I think down the road, anybody who purchased is going to be well rewarded. I'll put it that way. Because I think silver right now is so incredibly undervalued. We've been talking about that a little bit. Let's talk about the ratios. Just to remind everyone, if you guys are longtime listeners, have a tequila shot or something. Fact is, right now, we're at something like 97-1 gold to silver. That means silver is a screaming buy.
I repeat.
Gold's ratio against the Dow yesterday was something around just over 13-1. I imagine with the Dow down today, it might have come down to about 12-1. In 2011, we hit 4-1. In 1980, we hit 1-1, meaning the gold traded at $850 an ounce. The Dow traded at 850 points. And the ratio of gold to silver hit 16-1. In 2011, we hit 35-1 on that ratio. We're 97-1. It doesn't get to look much better than that. They're not going to ring a bell. They're not going to send you an email saying this is it. It doesn't get to look any better. So yes, we've been encouraging people to buy silver because it's incredibly undervalued. And if you look at how many ounces of gold it takes to buy a house, to buy the Dow, to buy the S&P, revaluing around the world with central banks. We even look at China. They bought gold at all-time highs back in December. They are not looking for drops in the market. They're not being patient buyers. They're buying buyers now. The world is changing now. The world is changing very quickly, and you need to have it in your hands now before that change happens. And that's really, pardon the pun here, the silver lining, the golden lining of it all is that clearly central banks are looking to have gold revalued. We know silver's undervalued. It is going to be revalued. Anything can start this market moving much, much higher. And retail market participation is still incredibly low. No one has gotten the memo yet that the prices are about to ratchet higher. So people are still so early to the game. I had a client ask me last week, if I can't get my money till next month, did I miss it? Listen, we will be in business a month from now. It's going to be a multi-year bull market in precious metals. This does not end at $3,000 gold. We don't know if it's going to end at 7,000 or 10,000 or 15,000 or, like Jim Rickard says, 20,000 plus. We have to take those ratios as it comes to really look at the price. The price comes last.
Yeah.
What we want to know is the value of it. And right now, how many ounces it takes to buy a house? Way undervalued. And we can talk those numbers. Give us a call, 1-8778-SILVER, the website, guildhallwealth.com.
Exactly. Now, while everyone is waiting to see if there's any gold, if there's any gold left in Fort Knox, there's another more obscure signal happening right now in hemorrhaging silver. It's happening in plain sight. The last time this happened, Jeremy, Buffett sank more than $650 million back in the 60s into silver. And he owned about a third of the above ground silver resources
Really?
on the planet.
Wow.
So definitely right now,
What changed?
It's worth paying attention to. He doesn't move around his money for fun. We know he's in cash. He's been sitting in a cash position for a few years now. And ever since that time, I mean, the move paid off, albeit it was a little early when he sold off. The silver did rise about $1,000% when he did purchase.
Hold on, Jerry. He's sitting on a lot of cash. Is he waiting for the leash to be taken off?
No.
Right? Because we know he's been like, we know how much pro gold he is and pro silver. There's a video clip of him talking all the numbers in silver. He's sitting there with all this cash on the side. Do you think he's waiting for the freedom to be able to go, yeah, I'd like to buy it now?
Yeah, if he has that freedom. If the shackles get removed off of Buffett, he'll definitely jump back in because the same indicators are back up again. He bought 129 million ounces of silver, more than 25% of the global annual productions. That's how convinced he was that in the accuracy of his own indicators. And as you could see in this chart below and what he has stated, by his own admission, he said he botched the trade. He bought and sold early, but he still made more than $500 million. So not too bad. But the three indicators that he watched are currently flashing, and you got to pay attention to this. This is how he did it. Three simple things. Massive ongoing debt and deficits. That's the first one. Number two, stagnant supplies. Remember, 6 years structural deficits coming out of the ground of silver. And you got plummeting stockpiles. These three indicators are the Buffett silver indicators that you can take advantage of, because right now this is the critical signal for the silver market. This is where the panic comes from and why you need to get involved in the market right now. And again, these three simple things need to be repeated. I'm going to go again. Number one, massive ongoing deficits. Number two, stagnant supplies. Lack of supply around the globe. Huge demand. And you have plummeting stockpiles. Why did the Department of Defense back in 2002 stop reporting their silver inventories? Why did they need to pass an act to get all of the junk silver back into the Department of Defense? All of the demand goes into the military.
And is massive ongoing deficit, is that in terms of supply or is that
debt?
Financials?
Yes.
Okay.
And as these signals are flashing, another signal is flashed for Moody's, the rating agencies. They're signaling a potential U.S. debt downgrade. Also mirroring what Ray Dalio, how he warned Trump against the ongoing deficits. We're inching towards 36.7 trillion in debt now, plus $100 trillion in deficit in unfunded liabilities. But Moody's rating agency has warned that it may downgrade the U.S. government debt this year. They following similar moves by the S&P and Fitch, who already reduced the AAA credit rating down to AA+. So Moody's is ready to go. They're watching the credit. Why? Because the debts are unsustainable. The currencies are flashing. And we got to remember, when they downgrade, gold and silver have their day. This is where you want to be out of the intangibles, the fiats, the toxic derivatives, what Buffett called the financial weapon of mass destruction. This is going to be the black hole that pulls everything in, but you can escape. Your escape route is very simple. The yellow brick road, right to the yellow in the gold market, the silver market is flashing, and it's ready to be taken delivery of.
It could possibly be the best time to pull the trigger on this.
Yep. Time
to, if you've been considering it, get a little bit in your hand, ladder into the market. You don't have to say it's everything or nothing. You need to get started and start small if that's what it takes. You'll build from there. The number 18778 silver, the website guildhallwealth.com. Those are the numbers. That's the website to get physical gold and silver in your hand, store it in the vault, or have it in a registered account. Just want to remind our audience that gold's up 19% this year, silver's up 17%. In any given year, that would be amazing, but we're only sitting here in April. Year over year, gold's up 36. Year over year, silver's up 26. These are incredible gains. This isn't just because there's been some massive financial destruction in the market. There's been no 2008 here. But we do know that years and years of printing money and deficit spending has caused investments to go into strange places, and there's been a whackload of distortions. We know that there's been a whackload of distortions. And one way we can see this whackload of distortions in the market, Jerry, is the makeup of the S&P.
Yeah, it's totally
Tell us
transformed.
about this chart you just pulled off.
There's a chart of the composition percentage. In just 25 years, the chart shows intangibles, which are things like brands and patents and algorithms, goodwills, very difficult to value. Back in 1975, so it goes into like every 10 years, there's a bar chart. So in 1975, the S&P composition made up of 83% of tangible assets versus only 17% of the, call it fiat assets. Whereas year over year over year to 2020, we're now, everything is transformed. The transformation of the S&P from being predominantly composed of real things is now 90% intangible assets. You're investing into things like brands and ideas and things like that instead of tangible assets like factories, commodities, resources. Their worth is often based on estimates and future projections. You know, this is where things get thrown off. The ratios and the totally imbalanced. You know, this is just looking like debt back prior to World War II, where whatever the debt number was, you needed 40% of that debt to be in gold. Now that debt, there's only 2% of 2% of that debt is the gold, whether it be in Fort Knox or not, we don't know. But the fact is, there's too much debt, and there's too much intangible fiat investments.
Fiat's nice, patents are nice, intellectual property's nice, but it feels like we're moving into an age where real stuff matters. Right? Real stuff matters. And especially when you're in an economy where the stock market's pulling off. Look, the stock market's been going up for a very, very long time, right? Very, very long time. Hopefully your advisors are helping you maintain those profits. But if they're not recommending gold and silver, I think you should ask why. You know, there's nothing wrong with being a little bit self-reliant and asking some questions like, why don't I own some physical assets? People only have one asset in their life. They consider their home. That's it. Their home, which most of them are indebted on as their single asset. And then when you talk to them about owning an actual asset, they're like, but what if the government wants to steal it from me? Come on. This is a free country. Yeah. It's a free country. You're allowed to own assets. And right now we feel that it's changing. It's going to go back. History is a swinging pendulum. Goes from one side to the other, and things are swinging back the other way. And we know that gold and silver are tangibles, undervalued in terms of price. And one of the ways you know it's undervalued in terms of price is it's kind of like, that saying about lies, they can get around the world a lot faster than the truth.
Yes.
You can print money. You can print trillions and trillions and trillions of dollars, but if you spend all year at a max capacity of mining gold, you might pull out 1.75 to the full stock. You'll add 1.75. And it's the same thing, by the way, with housing in Canada. Mm-hmm. There is a capacity of production that you can't top out at. You can't triple the supply of housing. So if you add a lot of immigration on top, you are going to create problems. You have to work at capacity. And this is the thing about real things, right? Ideas are great. Ideologies are great, but sometimes they run into a golden brick wall.
That's right.
And reality sinks in that ideologies only work to a certain point. You have to actually have the goods.
Yes.
Gold and silver are those goods. And they are undervalued. You need them. Silver in particular, you need it for stuff. Solar power, batteries, medical usages. It absorbs bacteria. Imagine the uses. And when they unleash the power of the entrepreneur onto the economies, feels bad right now, things are going to change.
Yes.
It's only going to get better.
Absolutely. Historically, as Voltaire said, paper money intrinsically returns to its value of zero. And this is the case. We have to now value your wealth out of fiat paper currencies and into ounces. Silver and gold are the quintessential tangible assets with intrinsic value. making them reliable stores of value during times of this uncertainty, but it's also your catalyst for growth. And Guildhall will help you to become your own central bank. If you cannot hold it, you do not own it. Guildhall offers the most efficient and direct routes in the physical precious metals market across Canada. We were the pioneers to do it back in 2015. You can protect your wealth against entirely outside of a failing currency system and digital banking system. Buy direct. You could secure with storage. You don't have to keep everything under the mattress. Fully allocated, unencumbered precious metals titled under your name. And if you have an RSP, an IRA, you're looking to protect that nest egg, give us a call. That number again, 1-8778-SILVER, and the website guildhallwealth.com or guildhallpreciousmetals.com.
And the big difference for us is it's all about service. We help the client open the account. We help them with their transfers, obviously the purchase, sale, storage. We get them their inventory reports, anything they need for their registered accounts. We have a team at Questrade that's there to support us, support our clients. We give you that concierge service, and we love doing it. We love educating the clients. Even today, Jerry, I had a client, didn't know much about RIFs. I said, you are not the only one. Nobody knows anything about their RIF accounts. We love teaching people about it and helping them and showing them ways to take advantage of that whole system. The number 1-8778-SILVER, the website guildhallwealth.com. If you've missed a show, catch us on Rumble, catch us on YouTube, catch us on Spotify, follow us on X. Thank you so much for joining us on The Real Money Show today, and we can't wait to speak to you next week here on The Real Money Show on AM 770 Calgary and AM 640 Toronto.